Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of February 15th, 2025. And in this week's episode, it's just myself, sprocket888. And it's going to be a quick episode, but we're going to jump on the soaring market and to discuss what I'm buying and or selling in these type of market conditions. But before we hop to that, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead Traders. Love to hear what you're trading, love to hear what type of content you want to hear about. Also, you can find a link to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts. So look us up, subscribe, and if you can't find it there, let us know and we will get it there. But let's hop to this week's content. And this week is going to be a pretty quick episode because I don't really have a lot of strategies to cover, a lot of things to go over. We just came off of a 5-episode mini-series around investing, which was a big change of gears for me on this channel. As you know, I've focused a lot on trading, a lot of short-term focus, and it was kind of interesting to take a step back and try to frame up a video series around a longer-term horizon. So I encourage you to go back, look that up. I have it as a separate playlist in the YouTube channel, so you can run through all 5 series in a row or all 5 episodes in that mini series. It really focuses on starting your investing journey. You know, what type of accounts to open, how do you set your goals, how do you decide your risk appetite, how do you put your money to work, how do you start putting money in that systematically with regularity and frequency so you can build up habits. How do you pick particular holdings in there? What types of things do you look at? I tied all of that together from my perspective on a retirement portfolio because that is the portfolio that I hold a lot of my long-term investments in. Whereas my regular brokerage account, I just do a lot of short-term trades. Now, one of the things that really kind of brought me to go through that was, one, we did get a few viewer suggestions on kind of drawing up some content around that, so happy to always respond to viewer content. But honestly, the other thing is the markets are kind of not that exciting for me right now. And I thought I'd just take a minute here to talk through some of why that is in the markets and what I'm a little bit skeptical on and a little leery. Maybe some of my perma bull is starting to come off, but really I'm relatively nervous at the current market trading ranges and the current valuation placed on a lot of these shares. And so what that's really kind of causing me to do is almost get in a holding pattern or a waiting pattern. And the reason that's driving this for me is historically, you can kind of go back to various episodes where this has happened, but generally speaking, my strategy works pretty well in all market conditions. My strategy is selling options, both on the call, the put side. But one of the areas that I have historically struggled is when the overall market tends to change direction very quickly and abruptly. So this could cause problems if the market very quickly and abruptly takes off to the rocket ship to the moon. It also causes problems if the market changes very quickly and abruptly to the downside and doesn't really recover. And there's been a few instances in the past where I've kind of gotten burned by this and I get a little bit too biased on direction. Most notably was the last time was a head fake. As the market really looked like it was kind of overvalued going into the Christmas holiday. And then we came into January and things kept kind of swinging up. And I thought, this is really kind of overdone. So I'm going to put a couple of shorts on and ended up getting pushed out of those positions as the market kind of kept going higher. And I said, well, I guess I'm wrong. And I started playing a lot more directionally from the downside, means I was bullish. So I started selling a whole lot of puts and everything. And the market very, very abruptly crashed through and kind of did a head fake. So the head fake part is, hey, I thought we were really going to start easing back right after Christmas that particular year. And we didn't. We didn't really start nosediving until end of February, early March. And I just got kind of crushed by that. Then another area was a big violent upswing too. And so I've always been really cautious, and that's kind of stung with me a little bit. And the reason that that is kind of getting those vibes right now is valuations are uber high. The average S&P forward earnings ratio, I think, is in the low 20s now, which historically maybe trades around the mid-teens. So that's really where you take the valuation of the companies and you say, hey, what is the multiple that you're attaching to their earnings to equal their current stock valuation? That's the forward-looking earnings ratio or earnings multiple. And you'll see this on tech shares and everything that just have these just crazy high multiples. And about a week or so ago, a couple weeks ago, this really started to kind of shine through with a lot of tech companies really kind of getting scared with AI coming out there, and big software-based companies really started to take a big hit on the belief that maybe their valuations are too high and AI is going to come in and kind of root all of this out. This is really overlaid with a lot of other market and economic conditions, job numbers, as well as where the interest rates stand. And fundamentally, the market is just starting to feel really toppy to me. Now, I'm skeptical on whether or not this is really toppy because historically I've come across this before and I've gotten in shorting things, and off to the races we go. And selling premium right now is kind of tough because the volatility isn't really there on a lot of these names. The volatility is relatively low historically, so I'm not collecting a ton of premium. And usually the put side has had more premium in it than the call side. That's just the nature of how options work. But because there's not a lot of volatility, selling that put price, I can't get a lot of clearance below where the stock is trading at. Okay. So, take a particular company, let's say Apple, and the volatility in Apple doesn't really let me get at a very high percentage move down, which means if I sell a put there and I'm really wrong about, not kind of big moves, and we really start to get a really true pullback and a really true correction, I will crash through that put strike. I will be assigned those shares and the market will keep on its free fall. And then I'll end up paying quite a high price relative to where the dust might settle. Now, normally if we don't get big violent moves, that's kind of okay. You get these small retracements, you maybe get assigned, but then the stock kind of continues upward. But really when you hit these all-time highs, that gets a little bit dicey. The other piece is I would typically sell straddles. So if we were not dealing with the overall market, but maybe a particular stock was really stretched on its valuation, really looked overbought, where the price is just sky high, that typically will push volatility up because it's violently moving outside of its normal range. And I usually err on the side of a strangle, because what I'll do is I'll sell a call above where we are and a put below. Most of the time we don't ever hit that call price. I get extra premium because the volatility is higher, but we get this elasticity back to a more normal price, which is typically well above the put, and a lot of the volatility comes out and I cash out. But I have found that doing that on the broader market, when the broader market is kind of at an all-time high, has kind of bitten me a few times on two fronts. One, it usually will start punching through on the top side, or it becomes an extremely violent crash down. And right now, I'm real leery of this violent crash down because I feel like a lot of what I'm seeing in the market has really people are trading on emotions and not on anything anchored in actual company valuations, actual even price charting. It's there, but it just seems like everything is parabolically going up. And the danger there from a price action standpoint, right, is you're not establishing levels on the way up. It's like you're really, really stretching that rubber band. And if you stretch it too far and it snaps, the retracement that you get, there's no levels, there's no consolidation that has caught it, has the potential to catch it. And so you get these giant, violent moves back down to previous levels before you even really get a chance to retest something and regain. And that's really where I feel the large part of the market. One of the tickers that we could bring up, I don't have it set up to show you, would be Oracle. Oracle had this monster move up and then a monster continuation of this move, and it never ever consolidated anywhere. If you look at the chart on the daily, the 4-hour, something like that, you'll see this huge parabolic move in Oracle, and there was nothing there from a price action standpoint to catch it, to consolidate, to establish a level on there. Now, if you couple that with some of the news and stuff that was out there, they got all hyped up on AI. They had big inflows of money allegedly from announcements done with the White House and different AI initiatives. And everybody started trading this thing way, way up. And then recently it started to come, people maybe started to sober up a little bit and look at it and go, oh my gosh, what have we done? Why is the price so high? And you will see an extremely and violent decline on Oracle. And now is Oracle, is it done? No, probably not. It's starting to consolidate now at the last price action or the price level or a price level. I think it actually broke through one of them and then traced back down. But what you'll see is this very quick run all the way up and then a quick drop off before it even starts to retest a level. And that is really what I'm seeing across the board in the market. And that's where I'm just staying away from my strategy right now of selling premium for fear that we're going to get this massive down move in the market. And if I'm selling those options, I'm going to get assigned and it's going to crash way, way down through there. And the reason I'm not selling topside calls is because that volatility isn't super high. So I'm taking on a lot of risk where the market can keep kind of going up and giving me trouble, breaching my strikes, because I can't put those strikes very far away on the top side because there's just not a lot of premium and I really can't get that far away from the current price action. So it doesn't take much irrationality in the market to challenge those strikes. And on the call side, it's even more dangerous because that's where you have unlimited loss, because there's no limit to how high an option can go, how high a stock can go, which will drive the price or the loss when I'm selling a call against it. So what this has caused me to do is really kind of sit back, do a little bit of evaluation on investment themes, investment strategy, which is, one of the reasons I did the mini series. The other piece that I'm noticing is I'm trying to hop on to maybe swing trades for the day. And I don't have a ton of time to really focus on different underlyings, different names. So I typically stick to the index. And the Russell has been a little bit fluid and probably one of the more volatile indexes. Traditionally it is, but I've seen a lot of price movement on there. And I kind of watch that a little bit pre-market. And I start kind of looking how it opens. And I've been relatively successful at doing swing trades on the contrarian move. So most recently, the Russell kind of had an upswing in pre-market, giant liftoff as soon as market opened, and I decided to short that with a pretty tight stop loss because futures can kind of get out of hand, and I shorted it with the futures, looking for kind of a quick pullback as it just seemed a bit too good to be true. Historical days, we've kind of seen these big swings up potentially and then kind of a back off. And it's almost kind of retesting or sorry, not retesting, but hitting a ceiling, it seems like around 2,700, 2,720 on the futures. And so I've been relatively successful at picking up quick swings where I'll put a tight stop loss on a short and a price target maybe 0.25% down, something like that. And playing in the futures, that's a pretty decent return on that quick swing trade. Largely, I'm kind of sitting by aside from that. Kind of working on some of the positions I've been assigned historically. I'm trying to work out of those with covered calls. Some of those shares took massive nosedives down, and they've been kind of coming back to a point where selling calls against them is helping me collect more premium. And even some of them are going to get assigned away. And I almost feel like I'm kind of just regrouping while the market kind of sorts itself out. So that brings us to the end of this week's episode. Like I said, not really a whole lot to drill into, a whole lot to pull up chart wise, a whole lot to show you from my trades. Because if you look, I really haven't made that many trades. I'm really in kind of a holding pattern where it seems, and a lot of the price action is suggesting that we're starting to get a little bit toppy up here. And I'm kind of waiting for some new trends to kind of emerge, waiting for some of the consolidation, waiting for some of those earnings ratios to kind of earnings multiples come down a little bit before I start kind of wading back in. So I'm basically kind of regrouping, taking a look at things, picking up a little bit more dry powder because ultimately I am bullish on the market, but I just feel it's a little bit too overcharged right now. And I think there's a big disconnect between traders. And one of the things I kind of mentioned is I feel like there's a loss of fundamental analysis. Not that that's something that I ever did, but I think there was more people in the market that participated in fundamental analysis, and I think that helped keep in check some of the speculative trend traders and things like that. But I almost feel like those fundamental analysis people have started to peel back, saying, you know what, you guys are crazy. I can't deal with this right now, so I'm gonna let you go. And that's dangerous in my opinion, because it feels like that is facilitating a lot more of a parabolic move, a lot more of something that's driving up even higher than it normally would when those fundamental investors would kind of come in and start shorting the stock and start showing a little bit of expressing their opinion on the valuation. I feel like they largely have kind of just stepped aside. Which lets the echo chamber of the bulls kind of resonate in there. And we've gotten a little bit even more amplified, which is dangerous because the higher you climb, the farther you have to fall in a retracement. And like I talked about on the Oracle, when you start getting that parabolic move up, the price action doesn't give you a lot of landing points or pauses on the way down. So you are taking an elevator up and an elevator down. Versus a stair stepping up and an elevator down, or more of a traditional move there. So hopefully you guys are finding something interesting out there in the market that's drawing your attention, whether or not it's short term or longer term. I'm kind of struggling a little bit right now, waiting for those opportunities to open up, but hopefully you're going to be met with great success. Good luck out there, have fun, and remember, think outside the block.